What's going to be the biggest tell that'll say that, yes, definitively it's in recession, definitively the Fed is going to have to cut rates, and therefore then is the time to get into risk?
Yeah, I think, well, we'll come to the second point, because I'm not sure when they start cutting rates, that's necessarily the time to get into risk assets. It might be a bit delayed this time. But look, if you look at all the recession indicators that we look at, consumer is already actually there, right? Business confidence is already there. Yield curves are already inverted. Obviously, the one that we're all talking about, with the two lagging indicators which the Fed is focusing on, are inflation. By definition, it's changes in prices over the past 12 months. Yeah. But that's coming down, but it's still very, very elevated, especially core inflation isn't coming down as quickly. And then obviously the labour market. So obviously we're going to get some data today, tonight on that front. But I think the job openings is going to be really interesting. For that needs to really come off quite significantly for the Fed to be convinced that its job's done.
Okay, and it's so consensus, isn't it, to say, oh, it's going to be a soft landing, oh, it's going to be a relatively mild and a shallow recession and the consumer's going to stay resilient. Would you beg to differ?
So my personal view is that this is not going to be a run-of-the-mill recession, right? So I think, it's not going to be GFC-like because we don't see the financial fragilities really coming through. High-yield market, yes, is leveraged, but a lot of that was refinanced in COVID. So really the funding crisis only comes in 2024, not in 2023. So that should limit the volatility from that perspective. What makes me a little bit concerned it will be worse than the run-of-the-mill, though, is obviously the Fed is going to have to make a very difficult decision. Historically, over the past 20 years, as soon as it gets signs or a whiff of a recession or stock market decline, it's ease policy. Why? Because inflation's under control. Inflation clearly is not under control now. So you've got the two factors. You've got they'll have to weigh up the fact that inflation is high still in the second half of the year, and also we'll have 400 basis points of tightening. Since 4.25% since March last year. That's still coming through the system, right? So from our perspective, by the time it becomes clear that we're in recession, they'll be reacting too late. The market's telling us they've tightened too much already, and have been telling us that since October, and they've continued to tighten. So I think this won't be a run-of-the-mill recession in my view.